The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 23rd, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Now is not too soon, 877-927-6648. Of course, if you can't give me a call, you can always send me an email. Steve@TFNN.com. Inside that subject heading, just put radio show question. We'll get to it right away. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 52 points at 21,847, about 0.25% to the downside. S&P down the same percentage-wise, or 6 points. NASDAQ down about 0.4% or 22 points. Russell is mean and green. I wouldn't say mean. It's just slightly green, up 56 pennies. Semis are up $3 or 0.25%. Gold is up $2.50. Silver up a nickel. Light sweet crude up 27 cents. Leading the charge here to the upside, it is the electric one. It is Tesla. TSLA up nearly 2%, $6 and change. Paratech Pharmaceuticals up $5.50. Ingevity Corp. That's up $4.50. Kite Pharma, that's one I can pronounce. There's no problem there. That's up $4. To the downside, it is WPP PLC down $11 or 11.5%. Amazon's off 10. Intuitive Surgical down 7. Ultragenics Pharmaceuticals off 7. Lazy Boy is a little lazy this morning, down 19% or $6, with about 3 million shares to the downside. I would guess that's probably pretty good volume for the lazy one. Now, we do have a couple questions that have come in. So let's go to those first, then we'll get back to the market. So Mike sent in a request out here, wants to take a look at APC as well as light sweet crude. So we'll do a little diagnostics. APC, by the way, being Anadarko Petroleum. Mike's got some 45 strikes, some calls that expire in about 23 days. And so the real question is, hey, where is this thing headed to? So this is a daily chart here, Mike, for APC. We can see that it's having a fairly decent day today. What you really want to see it do, if we take a look at our market profiles out here, you'd really like to see this thing close above 43.70. If it can close above 43.70, doesn't have to be today, can be tomorrow, can be the next day. But you want to see it close above that. That is the top of a brand new TAS daily profile. When I say brand new, I mean it formed yesterday. So we'll call it pretty much brand new out here. And if it can close above 43.70, that's the top of that box. That would be resistance. It also then gets you back inside the weekly range, which is at 43.48. So those are the numbers that you would want to pay attention to. Where would price head to based on our market profiles? Just simply go back to the swing point out here. Daily chart, the swing point you'd be targeting is July 28th, and that is somewhere between 46.22 and 47.95. So that's the first thing that you would be watching for. What you don't want to see this do is closed below the bottom of the box, which is 41.58, and certainly the swing point from August 18th, that low is 41.22. Should this thing move below there with 5.2 million shares, we'll put this on a weekly chart out here and see if we can figure out where this would head to. Then what that would do, Mike, is that would really bring into play the swing point from back in January of 2016, 28.16 to 36.40. So your question was, should you cut and fish or something along those lines out there? And the answer is no, I would stay right now. And let me put up the other chart for APC. And what we also can see here is that price has been moving lower, doing it with fish or cut bait. Thank you. Thank you. That's my wingman. That's my favorite polar bear in the background. And but you knew what I meant. At least Polar Bear knew what I meant out there. So we can see the price has been moving lower with less relative energy. A couple of days ago, we had a nice little piercing candle out there. That is a bullish reversal signal. No real follow-through on the next two sessions, but you are getting a follow-through today. As we take a look at this chart, you'll see Stevie's green dash line. That's actually a Tom DeMark support or resistance area. That's at the 44.78 area. So we've got a bullish reversal signal. You do have price above Stevie's red line, 42.19 out here. So, Mike, I say you stay put and you don't take any action today. You would take action with a close below that lower profile level of 41.58. So that should answer that question. But you had another question, which was CL2, and I think you're referring to light sweet crude. So let's go ahead. Pull up the light sweet crude contract out here. This is the September contract for light sweet crude. And the question is what? Have oil, so you've got other questions down here. It says million questions below. I only see 3 of them. Thank you very much. But have oil stocks bottomed? Is this the first day of a breakout? Oil stocks. And you also want to look at light sweet crude. Phew, that's a lot of stuff. Here's what we know about light sweet crude, or at least here's what I know about light sweet crude. It formed a nice little Gartley cell pattern. It looks like this. We'll go ahead and color it in so you can see what that Gartley cell pattern looks like. And we say that it completed it because of this nice little dark cloud cover candle that formed on August the 1st out here. And we can see the price has been moving lower. So in the case of light sweet crude, until it really closes above Stevie's red line, 48.20, it wants lower price. In fact, this could be forming now an A to B equals CD to the downside out here. If we take a look at that potential pattern, it would look something like this, taking us down to the 44.70 to the 43.700 area. But what I would really be paying attention for is that price oscillator in the bottom portion of my screen. It's nearing zero. It's not at zero. It's going to be at that zero level. It's going to be at that zero level. Still trading at 48.24. I don't know what to tell you about that, Mike. I believe you. Well, we'll tell you what we'll do, Matt. We'll go over and take a look at the at another tool that we can use out here. So I'm not sure what my system is doing, what it's doing, but thank you. So another wingman, this one from Colorado, at our back. But it's trading at 48.24. You're saying it's above Stevie's red line. Well, then there you go, as they would say. Still though, it's not above the swing point of 48.75, so could still be an A to B equals CD to the downside. Anyways, I'll go put another quarter into my machine. We'll see if we can get it to give us some accurate pricing out here. And even if it can't, we'll still give you some good data. Yeah, here's that live contract, 48.26. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we figured it out during the break there. I didn't roll the contracts over in light sweet crude, so that was the issue. And prices right now trading right at Stevie's red line, that 48.29 level. So last thing here, Mike, we'll take a look at the market profiles for the 60, 240 daily and weekly contracts out here. I'm using my synthetic contracts, going to provide us with more accurate data. And this shows here on the 60-minute time frame, it's in the bullish formation from the standpoint it's trading above 48.04. That's the top of its box. The same for the 240 was 47.72, so that looks good. This would suggest to you and I that light sweet crude is going to try to get to the 48.51 to 48.87 level. That's going to be the center of the box, both on a weekly and a daily basis. A move above that is going to bring 49.62 to 49.53 into play out there. Have things bottomed? And I think that was really the question out there as well. I think oil is just stuck in this little bit of a range out here, specifically with regard to have stocks like ExxonMobil or Chevron. CVX is now tied for number one in the position of the heaviest weighted stocks inside of the XLE. So it looked like the two of them, Chevron and ExxonMobil, not only represent 20%. So that's down quite a bit from where it at one time was like about 50%, just between the two of those out here. In the case of CVX, am I seeing a bottom out here? No, not necessarily. Clearing 107.79 would do a good job to suggest maybe an A to B equals CD to the upside out here, but we don't have that signal just yet. ExxonMobil, if I just take a look at them, and you said if oil stocks bottom, so I'm not really sure which oil stocks you're referring to. ExxonMobil, no sign of strength. Just candle-wise, forget about volume-wise. There's certainly no sign of strength out here inside of ExxonMobil. So I'm not seeing that out there. And I guess maybe the question would be, if I look at the sector, such as the energy sector, the XLE, all that's done today is run right into resistance, smack dab into Stevie's red line at 63 buckaroonies out here. We're not seeing any sign of a bottom just yet inside of the energy sector out there. So, Mike, thanks for writing in. Much appreciated. If we go take a look at, we've got another request out here from Our man Z inside the Tigers Den, what was it? Look at it. Says, do I see a topping pattern in IGV? So if we go take a look at IGV, first of all, IGV is the iShares North American Tech Software ETF. Now you try saying that one time very quickly, and you'll see that you struggled just as I did. But if we take a look at the current holdings, as of last evening, you'll see that the top 10 of those holdings represent 61% or 60.43% of that ETF. The top 10 being Oracle, number 1, 9.25%, Adobe Systems, 8 and change, Microsoft, 8 and change, Salesforce, 8 and change, Activision Blizzard. I wouldn't mind one of those blizzards right now. I'm not actually the kind that does snow outside just to cool things down a bit. We've got Electronic Arts, 4.5, Intuit 4, Autodesk 3, Symantec 3, and Service Now Inc. 3 points. So in order to really answer that question, truly, you'd want to at least go just take a look at the 10 of the 59 equities that are in there and see if those show signs of topping. We're not going to do that. We're just simply going to go take a look at the ETF IGB out here. So as we take a look at it, let's start by looking at the ETF, see what it's doing. And here's what we know about IGB out here. We know that there's some resistance right out here up at the July 27th bearish engulfing candle. Probably was also a little butterfly is what it looks like to me. Do you have butterflies in your stomach right now? That's the question out here. Let me see. IGV. I don't. But every now and then, if we take a look at that little butterfly pattern out here, it looks like this, right? You got that nice big hammer down there. And so here was our nice little come on, work for me. There's your little butterfly pattern out here with a big, huge bearish engulfing candle. And that really, and you can see prices trading above the red line. You can see the price oscillator is above 0 out here. So nothing really broken. Trading above its most recent, or right at above its most recent bearish reversal candle. So no problema there. If we look at volume, we can't look at the gaps, by the way, in this equity. You can see you can't really look at the gaps. This thing's got gaps all over the place. So we're not going to utilize gaps as either signs of strength or signs of, or I'm not going to use them inside this equity as signs of strength or signs of weakness. What we do know is this candle session, it's I believe this is at the all-time highs, but let's just make sure. I don't want to misstate anything. Yeah. And when you take a look at the monthly chart, nothing bearish about the monthly chart, and you're above profiles there as well. Back to the daily time frame, though. And it's above daily profiles also. So price is trading inside the swing point here from July 27th. And that's really your resistance level, 343,000 shares. So it's a fairly illiquid. It's not illiquid, but it's not the most liquid of vehicles out here. 70,000 shares back on July 26th. So what you want to do is just say, is this making a question was in a topping pattern, not necessarily the type of topping patterns that you and I like to, or that I like to look at out there. I can't say what you like to look at. If this is going to top or consolidate out here, you'd wait to sell this probably in the 145.70 level, but you wouldn't do it if you've got more than 343,000 shares that are trading into it. We are inside that candle until that candle gets rejected. All things suggest that the top of that candle should, in fact, get tested. So I think that's all the questions. I'll go take a look at my phone in a couple of minutes. The other question might be, hey, Steve-O, where is this market headed to? That would be a good question. And the answer is, I don't know for sure. Well, there was another question that came in that was asking me whether or not the move from yesterday was a counter trend rally out there. And the answer is, I don't know. I don't know anybody that would know. Here's what we do know with regard to, and the question is, what are we looking at out here? What indice would we be looking at in order to be able to make that move? What do you want to start with? What would you like to look at out here? Would you like to look at the SPYs as an example? Does that sound good? Let's go look at the SPY and see what we know about the SPY out here. Number one, we know that this trading session out here, which is really important, this one from the day of August 10th, we know, which had about 120 million shares, we know that that was passed with volume, 128 million. Wasn't like it was a huge pass with volume, but we know that a swing point was broken. And here's what we know. This is with regard, the question was really about bear markets. Are we in a bear market right now? Now, anybody that can say that we're in a bear market right now, hey, what are you smoking? Yeah. Now, we might be starting one, but to say that we're in one right now, we haven't broken any trends or anything out here. But we might be at the start of one. So the question would really be, hey, are we at the start of a correction or a bear market? And we may be. And one of those first signals as a possibility is simply breaking a swing point. In this case here, the diamonds really are the ones that generated, and that's where I really focus my attention on. The diamonds, actually, the Dow diamonds, went ahead and generated a nice Gartley buy pattern. We haven't seen a daily Gartley buy pattern inside the diamonds, Lucy in the sky with diamonds, for quite some time. But the swing point was broken out here. And the question is, will price get back up to its highs? Because if it does, I can guarantee you one thing. There ain't no bear market in this River City out here. We'll come back. We'll take a look at the counter trend rally because that is a possibility. And then we can take a look at maybe where the next move would be. We'll do it with the Dow Diamonds. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we take a look at the Dow Diamonds out here. We know it formed a nice little A to B equals C to the downside, 1 to 1.618. Nice little piercing candle that formed out here August 21st. Nice gap up. Yesterday, volume behind that move, 2.4 million shares. When it made a bottom out here, 3.4 million shares. No big deal out here. Well, let's take that A to B equals CD pattern. As I mentioned, it's the first Gartley buy pattern that we've seen in quite some time. All Gartley buy patterns have 5 potential outcomes. If we take a look at what those outcomes are at the moment, moment and where the Dow Diamonds DIA has traded into. It's right now sitting here at outcome number one, moved up through that 218 level in a big way, big, nice, wide-ranging bar. We're sitting right at that level right now. Chances are we're going to see a move up to about 219.41 out there. Perhaps, if we take a look at the reason why do I say perhaps? Well, if we take a look at the, in fact, it might even make it up to the highs out here, because we do have a brand new TAS daily profile that have formed inside the Dow Diamonds. If we're going to utilize those are the blue lines. We know that this has a bullish structure out here. Well, if in fact this is correct, and we're going to go see outcome number 2 and 3 and maybe even 4, then no bear market has even started out here. You just don't go back to the highs out here. That is not how a market makes a top. The way it makes a top is once it gets up there, once it rings the bell, it lets out for recess and nobody comes back. It just keeps cruising to the downside. You don't go back and keep testing and testing the highs out here. That doesn't mean you can't have some type of correction from there, but it tells me, it should tell you, that eventually price is going to be back up to that level out here. Now, the other thing that I was mentioning is once you break a swing point, as the Dow Diamonds have, that could start a series of lower highs out there, which could either lead to a correction, could end up leading to something worse than a correction out there. But right now, what we know is we have an actual buy pattern that formed 2 days ago and was confirmed yesterday. And this suggests that the higher prices are coming at us. And if we get all the way back to those highs, just blow that out. Now, if in fact the lows get taken out, right? I can't control the market. You can't control the market. What we can do is take a look at the signals that are present at the moment out here. And you're not going to spend all that kind of time, money, and energy learning about the Gartley pattern and then ignore them, are you? No, of course you're not going to do that. But if the lows get taken out from August 21st, then we will have a series of lower lows and lower highs out here. And that would say, because we are in the unfavorable seasonal cycle out here, that could last easily through the end of September, early October, middle of October timeframe. So it is really important to be paying attention to this. Now, let's take a look at the QQQ series ETF, because even though the Dow Diamonds and the SPYs were able to take out a swing point, the Qs have not. You see, the swing point, in essence, that the Qs we're dealing with here is from the trading session of August 10th. August 10th, the low out there was, let's see what that low was. That low was 140.89. The low 140.90 on the very next day. So we know that low of 63 million shares was tested with 60 million shares, was tested with 37 million shares. You're not going to ignore what Tom O'Brien has taught you, have you? When you test a swing point with lighter volume and you can't bust through it, if you can't bust them to the downside, what are you going to do? Well, the Qs are saying, therefore, that it's going to go try to bust it to the upside. Now, if that is going to happen out here inside of the QQQ series ETF, so it hasn't busted a swing point to the downside, we know that. We know it's tested a swing point with light volume. Well, what the Qs then need to do is they've got to prove themselves to you and me, and the only way to do that is get up above Stevie's red line. And if we're going to get up above Stevie's red line, that number is going to be 143.30. You can see by taking a look at yesterday's price action, that is exactly where price stopped, right at that red line. That is resistance. That is pièce de résistance out there. You get above that, 143.30. You'll be back to a rising price oscillator above zero. That's the bottom panel of my chart. Because we haven't been able, or it hasn't been able to bust out the lows with volume, which says, okay, I'm going to go try to bust out the highs, that's what it would do. Not until it closes above 143.30 out there. So who's the leader of the pack? Is it the Dow Diamonds? Is it the Qs out there? I don't know. But, James, I hope that assists you a bit with regard to your detailed question out there. And this is just going to be my take on the markets. That has nothing to do with anybody else's take out there. So at this stage of the game, depends which indice you're looking at, there's no great conclusion out here other than we have a buy pattern that formed across the indices a couple days yesterday. yesterday, well, the day before, really, out there. So hopefully that assists you. Now let's go to some other questions out here, if we can. And thanks for writing in, James. Much appreciated. Let's go take a look at Tom. Tom says, good afternoon, Steve. I say good afternoon, Tom. I'm looking for an entry point into LABD. What do you think about right here? So let's go take a look at LABD. That's one of the triple ETFs for the biotech area. And you know, Tom, if you're going to ask me that question, you know I have to go take a look at the IBB out here. You're looking for an entry point in this. This is the bear position. Here's what the this ETF says to us if we just simply use market profiles. And this says out here that as long as price closes above the bottom of its box, 661, then yeah, then it could be. What you really then want to see is you want to see a close above the bottom of the daily, 670. Really what you want to see is a close above 678. Because if it closes above 678 and this daily profile is correct out here, it's a bullish structured profile that just formed today. That would suggest price would go up to 748. But I don't like making my decision on the triple ETF. I would rather go look at the IBB. So as we go take a look at the NASDAQ Biotech Index ETF out here, what message is it providing to you and I? Because what Tom would like to see is some message of a breakdown out here. And do we have that? And the answer that Stevie says is no, we do not. We do not have a sign of a breakdown. All we have a sign of is price coming back to support, that being the top of the daily box out here, coming back into signs of strength out here. Those signs of strength beginning on June the 20th. There was big volume, 3.8 for this equity, 5 million shares the next day, 3.8 million shares the following day out here. So you're up against a huge wall. Not that it can't bust it to the downside, but now you have a new daily profile inside the IBB that formed. The bottom of its box, just above the weekly out here, you need to see this thing close below 30302, and even then it's a risky trade because of this accelerated volume, wide-ranging bars that take you back in the June 20th time frame out there. So, Tom, that's the way that I see it as we take a look at it right now. You also had a question about take a look at TVIX. You're back in TVIX. So if we go take a look at it, that would mean we've got to go take a look at the two futures contracts, really. That would be, September and October, in order to really get a gauge off of TVIX. Nonetheless, let's put TVIX up on the screen here for you. Let's provide you with whatever market profile information we can have here. In this case, if we utilize those market profiles, it says as long as you don't close below 1694, you're okay. You could see a run in 1951, maybe even 2293 out here. But if we go take a look at the actual spot volatility index, what's the message it's given to you and me? Not much. It's traded in between a zone of 1143 to 1255. Get above 1255, you got some action, Jackson. You close below 1143. Spot volatility index headed down to 946. Steve Rhodes, TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Hi folks, the 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, although he's not on the line, we were looking at the Tal-Ed group yesterday with Garo, and the question that he had then was, was that forming a shooting star candle? And at the end of the day's session, the answer was no, was forming what it looks like a high wave candle, similar to the doji. And in this case here, up at the highs, does it have any meaning? It can, if you were to see a lower close today. Kind of the Japanese would refer to it as leaves falling off of the trees out there. But Garo's not going to take any short positions in this equity, not until he sees a price on the daily chart, I believe, close below his blue dot out there. That is the parabolic SAR, which right now is priced at $30 and a penny, right next to his 5-day simple moving average out there. What I would suggest, though, because yesterday did have some nice volume, and we're seeing a trade slightly higher today, volume yesterday 6.1 million shares, it looks to me like this will go up and test that high. 32.33. Test it, take it out, but should at least test it. That's as of 143. Of course, we can check back tomorrow. Maybe it has a different message. A lower close would give you a different message than the one that we're taking a look at right this very moment. Now, we've got a request out here from Phil. Phil would like to go take a look at KOL, breaking out into confirmed A to B equals CD to the upside, says Phil. Well, I believe him. Let's take him at his word out here. And that is the Van Eck Vectors coal ETF out here. And I suppose, Phil, what you're looking at is the swing point here from the trading day of August 8th. Only 24,000 shares traded inside this ETF, so another one of those somewhat less liquid ETF structures. And today, you're up above that with volume. 4 times volume almost. You're up at 91,485 out here. So I'm guessing that is your A to B equals CD to the upside. Look good to you. It's really, that's what the question is. So let's go take a look at it. And the answer is yeah, it looks pretty good to me. I think it looks pretty good to you. Volume about 1.8 million shares out here on the trading day of November the 9th, and that was a resistance zone. So it's above daily, weekly profiles. Let's turn those off. Let's get rid of some cluster on our palette here. That way we can draw some other lines. And so when we take a look at this equity, a little bearish reversal. So it looks like that was a bit of an exhaustion move back on November the 9th out here, and that was really a resistance level, which it's now above. Moved above it yesterday, moved above it today. That was 1474, albeit on light volume out here. The A to B equals CD pattern, the more conservative one, maybe this is the one that you were looking at, I don't know. Let's see, this swing point right here from April 11th with 365,000 shares. What was that passed with? Light volume all the way across the board out here. Across the board. But nonetheless, this would be the conservative. Oh, what the heck? Didn't mean to draw a red line down there. This would be your conservative A to B equals CD out here, Phil. And that's only going to give us a price projection of about, well, that's interesting. How did that happen? How did that happen? Let me go back to that tool. See what the Sam heck I did there. Let's move those that text to the left-hand side. There you go. So 15, 14, what were you shooting for? Yeah, 15. Well, I don't know. You didn't actually say. But I would have to say the 15, 14, 15, 86 type area. That could actually set up your butterfly pattern. Let's go see what the expansion of swing points is and see where that takes us to. So that says, the 1548 area would be your 1.272 expansion. 1641. In any event, everything looks pretty good on this, except you would have preferred to have seen it really break above that little resistance area with some volume. So, the shooting star also on the week of November the 7th out there. That was, in essence, that exhaustion move that we took a look at. But otherwise, it looked at, you want to talk about large A to B equals CD. If we went and took the lows from 2016, that would be one heck of an A to B equals CD to the upside. It would look like this. No way is it clearing it with volume. So that much we know. That doesn't mean that it can't form out here. And if it were to form, well, this says over the long haul, you're looking at about 22 buckaroonies out there. I wouldn't trade it as such, but, that's what the weekly chart looks like on my screen. So, Phil, nice trade if you're in that, and best of luck to you. I don't see any other questions out here. So let's go take a look at some of our normal things until we get some more questions. Oh, I apologize. There is a question inside of the Tiger's Den, and that's to go take a look at the corny one, and let's go take a look at that contract. What are we looking for out here when we take a look at this, Danny? Are we looking for a bottom? Were we looking for a bottom yesterday? I think we were. The bottom keeps falling out of the corn futures, and take a look at the December contract out here. Still no bottom in sight. Now, I'm pretty good at spotting bottoms, as you know. And if we take a look at this, man, didn't we move it down to like 30 minutes or 15 minutes yesterday? I think, looking for market profiles out here. Well, the 30-minute, yep, you got nothing there to hang your hat on. And on the 15-minute, I don't know, but let's go take a look at it. No, I think we were looking at expansions, weren't we? Expansions of, speaking of butterflies out here, I think that we were looking at expansions. Oops, what did that do? Sorry about that. Let me get back to the chart out here. And, yeah, so, you're below swing points. As far as the next price target, I'd have to take a look at the expand. I don't know what it's going to come up with, the expansion of these swing points. This would say 343 and change out there. So that was wheat yesterday. So thank you for that update. I don't see any bottom in place anywhere. So we were looking at wheat yesterday, right? So just out of curiosity, remember we were taking a look at those 4 chartreuse. Did I say that properly? The pink ones, right? We were taking a look. Oh, you've got even another one today. It's an indication that something is coming, that a bottom is coming. It's just not here just yet. Not right now. Not right yet. That I see. That's the 15-minute chart here for the December contract of that. Let me put this back to 60 minutes out here. So I'm just not seeing it. I'm not seeing it. Are you seeing something, Danny, that I should go take a look at it? Because you're studying this a bit more than I am. This is wheat. You were looking at corn out there. In the case of wheat, the interesting thing about wheat is that the bottom of the 240-minute profile, 429, is the center of the box and the bottom of the box are the same. So an indication of a potential bottom would be, and I'm looking at the 240-minute chart, would be a close above the top of the box, the 434 area. And if you could close above that, and then you get a retracement, and where that retracement stops is somewhere around the 0.618 level, and then starts to form lower bottoms. Then you might have something out there, and you should see that play out in the intraday chart timeframes to prove that point to you. So when we go back, go back, whichever way you want to say it out here, get back from this break, we'll go take a look at Berkshire, the B shares out there, and answer for Saturday Night Live, SAT, what the price projection is. Chief Richard, TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Let's finish off today's session by going out to California and speaking with Garo. Garo, thanks for calling. Thanks for holding. We're going to take a look at SNAP, folks, SNAP, and I'm going to imagine Garo's been trading this to the long side since August 18th or the day after that. Garo, how are you doing today?
Very good. How about you, sir?
Very good. Thank you very much. So tell me what you're doing, how I can help you.
We don't have very much time. Do you think that today's snap hit that 50-day simple moving average? It was $15.19, but it didn't go any further than $15.13, and it rolled down. You think this is the end of the rally after 3-4 days hovering there, and it will roll down, come towards $10 or not?
This is no doubt that this is a logical resistance area for it. But I would say more likely than not, the target is going to be where this thing had gapped to the downside on July 11th. And I would say the better resistance area is going to be the 1636 or the 1695 range. That's what I would be looking at inside of Snap. Real quickly, let me put this on a weekly time frame. I'm just curious. Not enough data for me to worry about it from a weekly standpoint. But I see what you're looking at out there with regard to resistance at 50-day simple moving average, but there's nothing to suggest to me that it wouldn't, that it's got a good chance to get back up to that gap to the downside from July 11th. That's the way I'm looking at it right now.
Very good. Very good. Thank you, sir. Thank you.
You bet. Thanks so much. That was Garo in California. And then just lastly, we can finish off with Berkshire Hathaway out here. Let me see if I've got that. That was a question that came in earlier. And in the case of Berkshire Hathaway, it's still undergoing an A to B equals CD to the upside. There's several of them out here. It looks to me like 184.47 is maybe its next price target. Folks, thanks so much for tuning in. Stay tuned. Your favorite polar bear of mine, David White's up next. It's Wonderful Wednesday. Tom O'Brien from 3 to 5. I'll be back with you on Terrific Thursday. Take care, folks. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.